You're listening to Money Never Sleeps Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
Greed, for lack of a better word, is good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine when it hurts.
You know what it takes to sell real estate?
It takes brass.
I've fallen, and I can't get up.
All right, welcome to Money Never Sleeps. This is a show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. And I want to thank you for joining us today. A few things that we're going to go over today on the show. Let's start with the commodity markets. Let's look at what's happening with gold and silver. You know, you see a drop-off over the past, I don't know, day or two or three. This week, you know, we had a drop off on the precious metals, and that has to do more impacted from speculation. But if, you know, with interest rates not being cut, it shook up the market a little bit. And of course, you know, you have speculators that are going in and they're doing their thing, and look, it brought down the metals. Now, is it bringing things back down to reality? I think that once you have a lot of, you know, what's happening with NVIDIA and the other chip makers, once they start rolling out their next generation of chips, and you see how Facebook, which is Meta, and Amazon, and other groups, they're going to start doing this stuff internally. So what's going to happen is that they're going to need these metals in some way, shape, or form for their chips. It's inevitable. So I think that this drop-off is just a buying opportunity. You know, for those that see that this weakness is in the precious metals anyway, is a temporary thing. Because remember, you had precious metals moving higher way before anything was happening in Iran or anywhere else. So, you know, what's going to be transpiring now, in my opinion, is that we're going to see, we'll see probably some more slippage on it, because now we didn't have a cut this time. We're not going to have a hike. At least I don't believe so. You know, I more so believe that we're going to have a cut at some point this year, you know, but I think that with the play here is not so much looking at it as a short-term pop. You know, if you're a long-term player and you have the physical metals, you know, you hang on. You go and you monetize it as you can. If you are betting on it, if you're speculating like everyone else, you know, you have to have a long-term view, because as long as you have AI in full force, you need data centers. You need these high-end chips to deal with it, to be able to process, you know, the AI functions. So that's something that's not going to stop. It's still in its infancy. This has a long way to go. So you're going to see the chip makers, there's going to be a demand for the metals. So again, I would sit tight, but it may be a longer term hold. You know, you're still not in bad shape if you had it. You know, if you had gold when it was 3,000, even 2,500 some time ago, which is really not that crazy of a time ago. But yeah, you know, I think that with the demand that's going to come from the chip makers and what they're going to be doing, that's going to give some breath to the precious metals markets. All right, now something happened, and I spoke about it on the show, on the last show. The SEC, they just gave the Nasdaq the nod. They approved their tokenized equities pilot. They're going to tokenize equities, and they're going to have a pilot. The interesting thing here is that they're doing it. They're tokenizing certain equities. They're going to do this ETFs too, I'd imagine, and they're running this pilot now. You know, this is more than likely going to be a centralized blockchain. do I think that there'll be some compatibility across other chains? I think at some point there may be something there. If it's a centralized chain, you're not going to be able to use their protocols, of course. There are a lot of things that are going to be going on here with what the Nasdaq's going to be doing, even on a centralized level. This right here is giving, it's like giving that aha moment that, hey, blockchain and tokenization and crypto is here to stay, and it is. We've been saying it for years. I've been saying it for the longest time, and it is. And this is just some vindication in that space. Now, what's going to wind up happening, and it's pretty interesting, when they do this, they're still going to be running and clearing everything through the DTC, the Depository Trust Company. And I said this on another episode, that transfer agents, I don't care who you are, you're going to have to adhere to blockchain technology. You have no choice. You either conform and evolve, or you're going to die. Right now you're talking about the Nasdaq. I promise you, once they go, and they're going to have a successful pilot on this, I have no doubt about it. They're going to knock out all the bugs. They're going to knock everything out. You have some smart people, because remember, the Nasdaq is built for technology. They have technology companies trading there, and the systems. They're the first to actually do innovation. New York Stock Exchange came later, and the same thing is going to happen here. You have the Nasdaq doing it. You're going to have the New York Stock Exchange. Once that's successful, they're going to start doing their pilot, and they're going to start doing their thing. And then you're going to have, and it's inevitable, that every major exchange globally is going to have to do this. And then you're also going to have, some other exchanges. In my opinion, if the OTC markets don't start thinking about this, they're going to be left in the dust. All right, that means that you're going to have the participants, the companies that are listed on these exchanges, they're going to be involved in blockchain. You see how this continues to snowball? Now, is this something that's going to be impactful for the likes of Coinbase? Well, I think Coinbase, I think that they're going to have a pathway, and Kraken and Binance and maybe a couple others. I think they're going to have a pathway, and Robinhood especially, they're going to have a pathway to actually offer these on their platform. Robinhood more than the others. I think Coinbase is going to evolve. I think that they're going to have equities on their platform. It's not just going to be, just blockchain tokens, layer one and project tokens. They're going to have actual stocks on there, and I see that happening. They're just going to have to adhere to whatever regulations that are there. And when that starts rolling out, you're going to have the depth is going to be ridiculous. You're talking about, I believe the equity market, I'm gonna say 130, maybe 140 trillion dollar market. It's somewhat less, a little less than the debt market. Nowhere near the derivatives. Nothing touches derivatives. That's a 600 trillion to a quadrillion size market. But what's going to set the foundation here is the Nasdaq having that successful pilot and them running the trades through DTC on the blockchain. And what happens with DTC? If you don't know who DTC is, they basically hold all the stocks. They hold all the stocks for all the firms. So when a brokerage firm is trading, you go buy a stock at a brokerage firm. All this is going through DTC. So the stocks are being routed through DTC. That's like the SWIFT of stocks. If ever you sent a wire and you're using SWIFT, of course. Okay, same thing with DTC. And again, this is just going to snowball. All right. Once they go through this, again, they're routing all the transfers through DTC. Okay, and I believe that DTC is going to have to overhaul their system to adhere to the new technology. Again, once you let the dog out the cage, you're not putting it back in. Is it a dog? Is it a lion? Is it a dinosaur? Not a dinosaur. Maybe it's a big beast you're letting out the cage. It's been trapped in there for so long, and now you're letting it out because I think the markets are ready for this. People are ready for it. They've had years of getting familiar with things and understanding things, and I think more so the industry itself is starting to mature. All right, because the time of the meme tokens and all the hype and all the bull crap that you see out there, all the garbage, I think little by little that's gonna wind up sliding away. The same way you have on the OTC markets, you have the OTC QB, which is a higher level, a higher tier on their system, and then you have the pink sheet. That's the stuff that's on the bottom of the barrel. Okay, and I think at some point, I would imagine at some point, that bottom of the barrel is going to wind up going bye-bye as well, because what is the utility of it? All you're doing is allowing, for bad actor activity to come up. Of course, if you have, ADRs and you have foreign companies that want to be listed in the U.S. and they're using that as an easy route, so they don't have to go report certain things. That's the route, okay. But something, if you want to trade in the United States, then comply. Okay, at least do the minimum filings. These ADRs, if they're coming here, just go and, you can list on a higher tier on the OTC markets. I think that the pink sheet market is going to wind up falling by the wayside, and it should. And unless they do something further to enhance things there. Which they may or may not, right? But anyway, getting back to what is important, because that is not an important thing here, as far as the show is concerned today, right now. All right. So anyway, so this is what the Nasdaq is doing is going to lay the groundwork for the New York Stock Exchange and other firms to do it. So basically, these stocks aren't wrapped. They're not derivatives of it. They're the actual stocks, the certificates that are tokenized. And that is going to lead to fractionalization. That's going to lead to a lot of things. So you're gonna have someone that says, all right, I want to go buy, $100 worth of Amazon. All of a sudden, they have a fractional share in their account. That's a token. It's beautiful because the tokens, you can go 15, 18 decimal points. So you can spend $1 and get dollars worth of Berkshire Hathaway. So all these things are gonna start to evolve and get onto a better level, and it's going to continue to happen. Okay, and what this means for decentralized exchanges? Well, I think that this happening is these stocks are probably not going to be traded on decentralized exchanges until the Nasdaq, New York, and the SEC allow such a thing to happen. But I don't think that's going to be happening anytime soon. You had at some point decentralized exchanges trying to do this overseas, and even in the U.S., and they got in trouble. You have rules and regulations you have to adhere to when you're dealing with securities. You have to adhere to the rules, whether it's in the U.S. or Europe or wherever it is. You can't just say, hey, I'm going to create this token and it represents XYZ stock and this is what it is. All right, and now I'm able to trade it. You can't go and do that. They won't have it. It'll be problematic. Okay, now will we ever see a permission DEX to come out? Well, I don't know. I mean, when you're talking about decentralization, in order to go and have a situation like that, you have to have KYC and AML in your system, and that goes against all decentralization rules, right? So, is that going to happen? I think that even the DeFi market is going to evolve somewhat, and it's going to be interesting when it does evolve. And I believe that we're going to see this stuff transpire at some point. And I also think that the CME, the Chicago Mercantile Exchange, I also think that they're going to look into blockchain, not just going and tokenizing futures for Bitcoin and stuff like that. I'm talking about across the board. Across the board, because if they do that, you're talking about a derivatives market that is ridiculously big, and you're talking about bringing blockchain to the main stage, to the center stage, okay, and it should be there. This is the convergence of DeFi and TradFi and bringing it all together to make it all work. You had some great people in blockchain pushing for all of this for years. You had the bad actors that did certain things. You had other things that transpired. But now we're on the path to some amazing things happening. Okay, now will what the Nasdaq's doing with their because they haven't mentioned anything about what blockchain they're looking to do it with or how they're doing the pilot. Not that I know of. They may have, but I don't. As of the show, I don't know of the blockchain. If I do, I'll make mention of it. But I do think that I don't think that they will. I don't think they're going to have ERC20 standards involved in that blockchain. Only because they're looking to keep it centralized. Okay, they're not looking for a public blockchain. They're going to probably have this just on a private blockchain, which is okay. You have JP Morgan doing it. You have other companies doing it. The ERC20 just gives them a broader audience on a global scale, beyond what they have. But again, regulations come into play. You have to adhere to what's in front of you. So I wouldn't hold my breath on it, but we'll see what transpires. And just a little fun fact, since we're coming towards the end of the show today, I read something. It was really interesting that that Sam Bankman-Fried, in his little heyday, which was just a few years ago, right? When he was the what did they refer to him? They referred to him as the J.P. Morgan of crypto, because he was going to save the crypto industry and everything else like that. He was throwing the money around that wasn't even his. But it was interesting. What I found out is that he what he did, he invested in Anthropic when it first in the early days. He invested in a number of companies, Robinhood as well, and again in the early days he invested in Solana when it was like I think $6, $7, something like that. So all these investments happened, and all of those investments at today's valuations, would have made. I think that it would have made him valued at about 40 billion or more. Okay, and it's just crazy how the tides turn. In finance and in life and anything you do, people think that greed is good. Okay, and the reality is that you have to be careful, because you get too greedy, you get too arrogant. Your ego gets in the way. It can bite you 7 days a week, twice on Sunday, around the block and around the around the corner, around everything. All right. So you have to really look at things, not through your perception, but you have to look at things through somebody else's view. All right. Again, you can't get too greedy with things, because it'll bite you. It's better to go and do the right thing, do things the right way, and build up and get things going. Look at that. During that time frame, that guy went to jail. Okay, that CZ with Binance, what happened? He got into some trouble, and he actually went away, got pardoned, but now he is on Forbes' list. He's wealthier than Bill Gates. Again, how the tides turn. Anyway, I want to thank you guys for tuning in to Money Never Sleeps Radio, and we will be back with you with another episode of Money Never Sleeps. Until then, I want you guys to just be vigilant, be aware of what you're getting involved with, and stay away from the pink sheets, okay? Do that. And other than that, have yourself a great trading day. Thank you.
Initiating shutdown sequence.
You're listening to UCW Radio. In your face.
What is your major malfunction?
So let it be written. So let it be done.
Ladies and gentlemen, my mother thanks you, my father thanks you, my sister thanks you, and I thank you.
The views and opinions expressed on Money Never Sleeps Radio are for informational purposes only and should not be construed as financial advice. The host Louis Belavkath and guests of Money Never Sleeps Radio are not licensed financial advisors, and any investment decisions made based on information presented in this podcast are at the listener's own risk. Listeners are encouraged to consult with a qualified financial advisor or investment professional before making any investment decisions. The podcast hosts and guests do not endorse or recommend any specific investment strategies or products. All investments involve risk, and past performance is not indicative of future results.